All right, good morning. It is Thursday, March 31st, last trading day of the month. And there's a lot to talk about because yesterday stocks closed lower. So we'll take a look at it, why that is. And since today's the last trading day of March, we will take a look at the month performance and also the performance year to date of the major indices. Now, this morning, big news in crude oil. Crude oil drops more than 5%. We'll talk about why that is. And also Robinhood, we briefly talked about it yesterday, but then it can't catch a break. So more news there. We'll cover this anyhow. Oh, yeah. And also, as promised yesterday, we'll talk about why Mark took the NXPI trade and I didn't. And we'll show you the exact reason. But before we dive in and show you what's happening here, if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Mark Hodgson. Together, we have more than 47 years of trading experience. And every morning, we sift through a mountain of news websites and newsletters and reports, and then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. If this is your first time here and you're new to the channel, don't worry. I know it can be a little bit overwhelming, but we do have a special video just for you that I'll link to in the description, and that's a great place to get started. All right. So let's see, Mark. Looking at the markets yesterday, heading into the last trading day of the month. Markets were a little bit down yesterday.
They were. The S&P and the Dow both snapped the 4-day win streak, so the win streak came to an end. The S&P down 0.6%, and the Dow down. Oh, yeah, the Dow down just 0.2%. So the Dow lost 65 points. Not a big loss for the Dow, but snapping those losing streaks.
Winning.
And the Nasdaq, Marcus, I saw you bring up the Nasdaq. Actually, the biggest loser here, down 1.2% yesterday.
Yeah, but I mean, if you look at this, I mean, over the past few weeks, so the Nasdaq, for example, rose 16%. So yesterday there weren't really any major news. Yes, there were some news that the peace talks in the Ukraine-Russia war are not making as much progress as expected. But honestly, this year's just some profit taking. Wouldn't you agree?
Sure, sure. The last 3 weeks, well, it looks like we're on track anyway to finish the week positive, and that would mean 3 winning weeks in a row for the indices. And like you said, coming off of those lows that were established back at the beginning of March, it's been a nice run up.
Yeah, and I mean, looking at the economic calendar, we talked about this. So let me just bring it up here. So the big one is definitely tomorrow, the jobs report. And until then, I mean, there weren't really any news that could keep the market lower. So it does what it always does, drifting higher. And that's what we saw here this week.
Sure, absolutely.
So before
And
we talk more about what's happening, what do you expect for tomorrow the markets to do with the with the jobs report?
unless there's just a big surprise, I think it's going to be a whole lot of nothing. Last week we actually were pretty strong going into the weekend, right? One thing to keep an eye on is are traders taking on risky assets, or are they holding positions into the weekend, right? And I think that that's a strong sign, because with the uncertainty with Russia and the war in Ukraine, if you think there's a whole lot that's going to happen over the weekend and things are going to get worse and there's going to be these big news events, then you want to close out some of the positions, take some profits, and be light going into the weekend. But if you really don't have that uncertainty, then it makes sense to hold into the weekend. And that's what we've seen, at least for the last 2 weeks. I don't think that there's going to be a big change in that sentiment, unless the jobs report just does something crazy that's unexpected.
No. All right. And then we also have crude oil. Crude oil making headlines almost every day, up and down and up and down from around $95 to 130, right back here to $95, back up to 115, and now trading around the 100 mark. This morning, down more than 5%. Did you see what happened?
I did, and yesterday I mentioned that, in my opinion, crude oil is the wild card here. What's going to happen with crude oil, because it does have a big impact on inflation. And what we had here was an announcement that President Joe Biden's administration is considering releasing a pretty significant amount of oil from our strategic petroleum reserve. This amounts to about 1 million barrels a day.
Yeah, and I think the news is that he's willing to do this for the next 6 months. So for a
Yes.
total of 180 million barrels. So it's not that, okay, let's do it for a week or two. No, I mean, he's prepared to do it for the next 6 months. This means that there's obviously more supply, and this is why crude oil prices are moving lower this morning.
And
It
of
is
course,
the,
the
yeah, go ahead.
I was just going to say, of course, the rationale here is by doing that, it really limits the impact of Russian oil not being available and sanctions, since Russia is the second largest exporter. Uh, the question is, what happens if we go past 6 months?
Yeah.
Then, crude oil could be higher. We'll have to see.
We'll see. I mean, this is where it goes back to the peace talks that are happening this week in Turkey. And the goal is that the negotiators of both Russia and Ukraine are getting to a point where it does make sense for Putin and also President Zelensky, Ukraine President Zelensky, to meet in person and sit down, or I don't know if it is in person, at least that the two leaders meet and talk more. So the idea is here that the negotiators are getting to a point. This would be the first time ever that this is even being considered, that Putin and Vladimir Zelensky are actually meeting and talking about a possible resolution. So that's I think kind of good news.
Yeah.
All right, last trading day of the month. So let's take a look at the performance and see where we are. So the S&P for the month up 5.2%, and boy, what a month it was. I mean, this is where we started here. Let me just put a horizontal line in there. Moving lower, but then right now finishing really, really strong. But year to date, still underwater. Still year to date, we're down 3.4%.
Yeah, a little negative year to date. I think that the Nasdaq is down about 7% year to date, but a solid March. Yeah, weakish quarter. But gosh, I'll take the last 3 weeks.
For
Nice
sure,
run
over
up.
everything
Run up.
that happened here. Absolutely. Now, we promised that we'll talk about why you took a trade and I didn't. But before we do this, I just want to bring up Robinhood, because we talked about it yesterday. Because at first there were this positive news where Robinhood was rallying just, I can't even remember, 25% or something like this, on news that they are offering extended trading hours like other brokers do. But again, at first they got excited. But then yesterday, down again 8% or 8.5%, because this is where who initiated coverage? Morgan Stanley. Morgan Stanley. Well, okay. Anyhow, so they had something to say about Robinhood.
Yeah, they said that the Wall Street firm Robinhood could be the younger population's Charles Schwab, as it has a firm grip over millennials and Generation Z. However, Robinhood will need to expand its product offerings if it wants to retain its appeal. And so it came in with initiating coverage of the company with an equal weight rating.
Yeah, and that's so interesting, because on the one hand they extended the hours, right? And this is where everybody got excited, even though this is what other brokerages are already doing. And then Morgan Stanley said, guys, that's not enough. They need to do way more. Anyhow, okay. So let's talk about trading. Let's talk a little bit about our trades. And when we are at the PowerX Optimizer and we are looking for new trades, I mean, I have a four-step process of how I decide whether I take a trade or not, especially when trading the wheel strategy. And so the first thing is always, okay, do we want to own the stock? So one of the trades that I took yesterday was on Deutsche Bank, because I'm okay owning Deutsche Bank. Step number two, and we talked about this, is am I okay owning it at the strike price? And I sold a 12 put, and I'm okay doing this. Now, you, on the other hand, did an NXPI trade. So let's talk about that for a moment. So NXPI popped up on the scanner. So first of all, NXPI, is that a company that you want to own?
Sure.
Good. And you took actually the strike price that you sold was 100. What was it? 175, right?
Exactly.
Okay.
Exactly.
So here, sold 175 puts. And I mean, usually we're pretty much on the same page. But there's a reason why I chose not to take the trade. Shall we talk about the asset correlation? Because
Sure.
that's the next step that I like to do. This is where we have this asset correlation tool. And this is where I plug in the stocks that I already own or the puts that I sold, because the puts that I sold, I could get assigned. And then let's just zoom in here a little bit. I just plug in the new stock that I'm considering, NXPI. And if we see this, we see that, oh my gosh, it has a high correlation to one of the puts that I've sold on AMAT, Applied Materials. No surprise there, right, Mark?
Yeah, I mean, here they're semiconductors, right? And just for anybody new to asset correlations, if you have a one reading, that means that it's a perfect correlation. So basically, for a 1% move in AMAT, you have a 1% move in NXP. And if it's -1, that means it's a perfect inverse correlation. So if AMAT was up 1%, and it had a -1 correlation, then NXP should be down -1%. So when we have readings that are zero point 0.5 or higher, that's something to be aware of. And here we see that that 0.79 reading is in that orange warning zone, meaning that it does have a high correlation, which if everything's working out and moving in the right direction, no big deal. But over time, if you have such a high correlation, then wins and losses are basically in step with one another.
I mean, this is almost like taking a double position on AMAT because there's such a
Exactly.
strong correlation. And if you want to diversify a little bit and have some diversification protection here, it does make sense to check the correlation. Now, we have the correlation here for different time frames. We have it for a year, we have it for 9 months, we have it for 6 months. And very interesting, if we go to 3 months, we see, oh my gosh, everything is lighting up here in bright orange. Mark, what did we do? So let's talk about
Yeah,
this of why in the last 3 months we have everything in orange, but then if we go out for 6 months, 9 months, or a year, everything seems to be okay. So what's important to know here when we are selecting the time frame?
sure. And this is where shorter time frames are going to be more representative of overall market conditions, right? So if markets are falling, then stocks tend to be more correlated just because everything's falling, right? And you probably heard the analogy: a rising ship, lifts all boats or raises all boats,
I think it's a
and it's the
rising
same.
tide.
Rising ship. Yeah, I said rise.
You
Well,
said a
forget
rising
that
ship.
analogy. That's a stupid one. No.
It is early. Okay.
A rising tide. I should know that. Anyway, a rising tide lifts all boats, right? And so when everything's headed one direction because of overall market conditions, you tend to see more, correlations. And that's what we had over the last 3 months. We had stocks falling, and yes, some were falling at a smaller pace, or not as much percentage wise. But that's why everything's more correlated in a down market.
Right. Now, let's also talk about USB because we talked about it earlier in the stock market update. We consider trading USB. And if we didn't get filled, but this was on Monday. If we had gotten filled, then as we can see, there's a high correlation between USB and Deutsche Bank. Yeah, which is no surprise because this US Bank Corporation and this Deutsche Bank. So both financial services, and this is why we are writing it down here as well. So what it is. So therefore, no surprise that there's a high correlation, not as high as in the semiconductor industry here, but still very high. So this is where I think it's just important that you know when you are trading various stocks of how correlated is your portfolio, because based on this, you might make a decision to skip selling puts on a certain stock or not. So at least that's what we do. And we also did a video on this that explains it in more detail. And I'll link to the video here right here, together with some other videos that you might find super helpful. Okay, Mark, we got to get hop over into our mastermind. Let's do that. Have a great
Yes,
day.
sir. Happy trading, everybody.